The Dulux Group has been put to the test in more ways than one this year, having had to deal with floods and earthquakes. However, the paint maker has still managed to post a respectable profit in its first year as a standalone company after demerging from the now rather troubled Orica, as Emily Stewart reports.
Earlier this year, floodwaters inundated Dulux Group's main paint factory in Queensland, and it was shut down for 2 months.
The Rocklea factory was a significant impost on the business. Over half of the profit that derives from Dulux Group relates to products coming out of the factory in Brisbane.
The Australian paints business lost about 3% of total sales, and that's about 2% of the group. The best estimate at the moment is total costs of around $71.4 million. It's important to also remember that the ultimate cash impact of the flooding and destruction at Rocklea was really mitigated by business continuity insurance that they had in place.
The Rocklea plant, however, only became fully operational again in July. Despite the difficulties, in its first full 12-month result since the split from Orica, Dulux Group has posted a net profit of $93.2 million, up almost 36% on last year.
It really shows the strength of the company's management and their brand coming to the fore. The company's delivered EBIT margin expansion and picked up some market share gains.
The Queensland floods haven't been the only challenge the company has overcome. Residential and commercial construction has slowed in the past year and input costs are rising. But fortunately, sales have remained strong in the home improvement category.
The high levels of home ownership that we have in Australia is something that fundamentally underpins both retail do-it-yourself participation in improving one's home, but also in our case, half our business goes through trade, where people are using a trade painter to actually repaint the existing home, and we saw that hold up equally as well also.
Dulux Group's international division hasn't fared so well, with sales in New Zealand flat as the economy continues to recover from the Christchurch earthquake. Sales in China have also slowed because of tighter residential finance lending. But Dulux expects sales in both countries to rebound soon as the rebuilding continues in Christchurch and the Chinese business is transformed.
We've just announced that we are seeking to complete in the next month or so a merger between our China business and Camel Paint's China business. This will in effect double the size of the business we have on the ground.
Dulux is forecasting a good year across the entire business and expects to increase its full-year net profits in 2012.